DAX 30 struggles to break 14,000 as COVID-19 remains a serious threat. Equities are broadly weaker this morning as Joe Biden hinted at tax cuts while introducing a new stimulus package last night. Meanwhile, the safe haven dollar is up, despite the Fed pointing out last night that they will remain accommodative in the near future. President-elect Joe Biden unveiled last night a stimulus package worth $1.9 trillion, an expected decision that was already discounted in the markets. But suggested tax hikes caused a small correction in equities, led mostly by the tech-heavy NASDAQ. The extra spending has caused bond yields to rise rapidly, fueling a rotation from technology and value stocks to growth stocks. British pound latest, sterling underpinned by GDP data. The UK economy performed better than expected, data released showed. The latest GDP data was stronger than market forecasts, while last month's prints were also revised higher despite the COVID-19 lockdowns. According to the Office for National Statistics, corona restrictions impacted the drinks manufacturing and services industries, but falls in output were not as large as those seen in March and April, as businesses found ways to adapt to the restrictions. Crude oil prices may turn lower as market risk appetite sours. Crude oil prices rose yesterday, shrugging off souring risk appetite across broader financial markets that might have been expected to weigh on the cyclically sensitive commodity. The benchmark WTI contract closed at the highest level in nearly 11 months. Gold prices idled in choppy range, confining them all week. The upswing came as OPEC signaled that its supply restrictions efforts are on track to deplete the world's brimming inventories. Nigeria was forced to declare force majeure and suspend exports from the country's leading Forcados terminal amid reports of leaks, which may have helped underpin prices. Meanwhile, stocks slumped as bond yields rose amid reports that President-elect Biden would propose an expansive fiscal stimulus plan, which he subsequently did. Markets appear worried that the effort might push the Federal Reserve to rein in ultra-loose monetary conditions sooner than previously thought. Dow Jones futures rise with ASX 200, Nikkei 225 on Biden's stimulus plan. Federal Reserve Chairman Jerome Powell reiterated the Fed's dovish stance in a webcast last night, suggesting that the central bank will keep its QE in place for at least 2021 and maintain interest rates unchanged through 2023. Against this backdrop, market focus shifted to Biden's announcement of a U.S. $1.9 trillion COVID relief proposal, which may include U.S. $1 trillion in direct relief to households, U.S. $415 billion to assist vaccine rollout, and U.S. $440 billion to support small businesses and communities. Additional stimulus checks of U.S. $1,400 on top of the already approved $600 payment to individuals are part of the plan, too. The Nikkei 225 index is challenging a key chart resistance at 28,770, the 100% Fibonacci extension level with strong upward momentum. The overall trend remains bullish biased as suggested by upward sloped 20, 50, and 100-day simple moving average SMA lines. Breaking 28,770 may open the door for further upside potential with an eye on 29,680. the 127.2% Fibonacci extension.